My top 8 favorite companies from the Australian Stock Exchange. This is part 2 of a 2-video series. If you want to watch part 1, you'll find the video in my recorded videos. I posted it last week. And before we get into it, the disclaimer again, I'm invested in all of the companies I mention. So do not take this as advice. Do your own research. And also, I do not hold a financial services license. So do not necessarily trust what I say. Do your own research before you invest in companies. And yeah, get right into it, and we'll talk about my top 4 of my list, the best companies and the top 8 of the Australian Stock Exchange. On position number 4, Fisher & Paykel Healthcare Corporation. And they have done a significant job especially over the last year. So when you see the share price, how it got up over the last couple of months, very astonishing. And a company that is already very established and has different parts of the business. The main focus is around healthcare, but also about kitchen appliances. And yeah, very established Australian company, very established business, with a market cap of around 15 billion. They pay out a dividend, and the dividend sits at around 1% per year, which is great, and they can pay it from their balance sheet, which is good, and they still reinvest a lot of their earnings into the company. So really like that company, very stable, and yeah, it's one of my most favorite investments over the last couple of months. Number 3, this would be COLs, and the COLs group. I really like that supermarket chain, and it got actually demerged from Wesfarmers in end of 2018 and started to trade as an individual company on the Australian Stock Exchange at a price from around $10 per share and sits now at around $16 per share. And I got actually into the share already quite early, so I could take a lot of that growth with me, with my shares, which is great to see. And because it was already an established company and established business, they started to pay out a dividend from the beginning onwards, which sits at around 3.5% to 4% per year. So quite high dividend and very established business. Obviously, the growth potential of a company like that is not as high as from another company, other smaller companies, but a very established business, and I really like the outlook as well. Number 2, this would be a bank. It's not one of the biggest banks in Australia, but I still think sits in the first 5 or so from Australian banks. But it's an investment bank, so no typical customer-facing bank. It's more an investment bank. This is Macquarie Group, sorry. And yeah, really like the business model. Very established bank, very established business model they have. And when you compare the share price with the other banks, it did not draw down that much as the other 4 major banks in Australia, which is great to see. Still, it got hit quite hard, but from the high that was around 150 is now down to around $99 a share, which is still quite a significant loss, but definitely better positioned than all the other banks in Australia. They pay out quite a high dividend. It sits usually at around 4 to 5% per year, which is great. And I would assume that a company like that can still continue to pay out their dividend. And yeah, going to my most favorite company on the Australian Stock Exchange, and it's actually now the largest company on the Australian stock exchange measured by the market cap, which now sits at around $150 billion, which is CSL. It's a pharmaceutical company with international business, and yeah, as I said, now the largest company by market cap here in Australia, even on top of all the banks and the big mining industry companies. And yeah, when you see the share price again, this is what you want to see in a share price. Massive growth over the last years and even before. The revenue growth is very, very high and stable. And yes, they do have a lot of debt on their balance sheet, but they're managing that very, very well. And you can see when you look over the last 5 years that it's actually going down. Which is great to see. And so I think very, very established company. Yeah, very high price per earnings ratio, but I think that is what you have to pay for when you want to buy into a very good and established company like that, where you still have a very high growth potential. Yeah. This was the rest of my top 8 lists, so the last 4 companies that I wanted to mention. I hope this was valuable to you. Let me know what you think about those 4 companies in the comment section below. And I thank you for watching, and I see you guys in the next one. Bye.